Finding stocks that can potentially deliver 10x returns is every investor's dream. The ability to identify these high-growth stocks before they explode in value requires a combination of strategy, research, and a keen understanding of market trends. Whether you're a seasoned investor or a newcomer, the key to identifying 10x stocks lies in understanding what makes these stocks rise. In this video, we'll explore the techniques and strategies to help you find these explosive opportunities early on, so you can position yourself to profit before the rest of the market catches on. In this video, we will talk about how to find 10x stocks before they explode. So make sure to watch the full video. 1. Focus on small cap stocks. Small cap stocks are often the best candidates for explosive growth. These are companies with a market capitalization typically under $2 billion, which means they're in the early stages of growth. These stocks have the potential to grow rapidly as they expand their business, increase revenues, and gain market share. Small cap stocks are riskier compared to larger, well-established companies, but they offer huge upside potential. Many of the biggest companies today, like Amazon and Apple, started as small cap stocks before becoming massive players in their respective industries. To find these opportunities, look for companies with a solid growth strategy, innovative products or services, and a strong market niche. Keep an eye on industries with emerging technologies or trends that can fuel rapid growth for small cap stocks. The potential for explosive returns is there, but only if you identify the right company early enough. 2. Analyze industry trends. One of the most reliable ways to find 10x stocks is by tracking industry trends. The market often rewards companies that are in the right place at the right time, capitalizing on emerging trends and technological advancements. By understanding where industries are headed, you can identify stocks that are positioned to benefit from these shifts. Look for industries with significant growth potential, such as renewable energy, artificial intelligence, electric vehicles, or biotechnology. These sectors are expected to see massive growth in the coming years. Once you've identified promising sectors, drill down into the individual companies within those industries. Companies that are early adopters of new technologies or have innovative solutions will often be the ones to experience explosive growth. Keeping up with industry reports, news, and expert predictions is a great way to stay ahead of the curve and find the next 10x stock. 3. Research company fundamentals. While small cap stocks and industry trends are important, understanding the fundamentals of a company is crucial when searching for 10x stocks. The company's financial health, management team, growth strategy, and competitive advantages should all be considered. A company with a strong balance sheet, steady cash flow, and a capable leadership team is more likely to weather market fluctuations and continue its growth trajectory. Pay attention to the company's revenue growth, profitability, and debt levels. Companies with low debt and high growth potential are typically better positioned to generate substantial returns. Also, evaluate the company's competitive edge, whether it's a patented technology, a strong brand, or a unique business model. Understanding these fundamentals will help you assess whether a stock has the potential to grow by 10x or more in the future. 4. Look for undervalued stocks. Undervalued stocks present significant opportunities for investors looking for 10x returns. These are stocks that are trading for less than their intrinsic value, often due to short-term issues or market sentiment. Identifying undervalued stocks requires thorough research into the company's true potential and an understanding of its market position. To find undervalued stocks, use metrics like the price-to-earnings P/E ratio, price-to-sales P/S ratio, and price-to-book P/B ratio to compare the company's stock price to its earnings, revenue, and book value. Additionally, look for companies that are under the radar of mainstream investors but have strong fundamentals and growth potential. A company that is currently undervalued but has strong future prospects could be primed for a major price jump as the market begins to recognize its true value. 5. Monitor insider buying. Insider buying is a powerful signal that a stock may be poised for growth. When executives or board members buy shares in their own company, it suggests they have confidence in the company's future prospects. Insider buying is often seen as a strong signal that the stock is undervalued or that the company is on the verge of a breakthrough. Tracking insider trading activity can provide valuable insights into a company's prospects. If insiders are consistently purchasing stock, it's a sign they believe the company's stock price will rise. Conversely, heavy insider selling can signal trouble, so be cautious when this happens. Websites like Open Insider provide detailed information on insider trading activity, which can help you spot potential 10x stocks before they explode. 6. Leverage technical analysis. Technical analysis is a method used by many investors to predict future stock prices based on historical price patterns and trading volume. By studying price trends, chart patterns, and technical indicators like moving averages and the Relative Strength Index (RSI), you can identify potential breakout opportunities for stocks. In the context of 10x stocks, technical analysis can help you time your entry point for maximum returns. Look for stocks that are breaking out of consolidation patterns or approaching key support or resistance levels. These patterns often indicate that the stock is poised for significant price movement. Using technical analysis alongside fundamental research can help you find stocks that are not only undervalued but also positioned for explosive growth in the short to medium term. 7. Follow expert recommendations. While it's important to do your own research, following expert recommendations and advice can provide valuable insights when looking for 10x stocks. Top investors, analysts, and financial advisors often have a deep understanding of the market and can identify promising stocks that the average investor might overlook. There are several sources of expert recommendations, including financial news outlets, investment newsletters, and social media platforms. Following experts who specialize in high-growth stocks or niche industries can give you access to stock picks and insights that you might not find elsewhere. Keep in mind that not all expert recommendations are created equal, so it's important to evaluate their track record and methodology before acting on their advice. Understand market sentiment. Market sentiment plays a crucial role in the price movement of stocks. Sentiment refers to the overall mood or attitude of investors toward a particular stock or the broader market. Positive sentiment can drive stock prices higher, especially if investors are enthusiastic about a company's growth prospects. Monitoring social media, investor forums, and news sources can give you a sense of the prevailing sentiment around the stock. Tools like StockTwits and Reddit's Wall Street Bets are popular for tracking discussions about specific stocks and trends. If you see increasing buzz or excitement around a particular stock, it could indicate a potential breakout. However, be cautious of overly speculative sentiment, as it can sometimes lead to market bubbles or crashes. 9. Keep an eye on earnings reports. Earnings reports are an essential tool for evaluating the financial performance of a company. These reports give investors insight into a company's revenue, profits, and future outlook. Strong earnings growth is a positive indicator of a company's ability to increase its stock price, especially if it beats analysts' expectations. When analyzing earnings reports, look for consistent growth in revenue and profits. Also, consider forward guidance provided by the company's management team. If a company is optimistic about its future prospects and expects strong growth, it could be a sign that the stock is undervalued and primed for a major price increase. Earnings reports can be a catalyst for explosive growth, making them crucial when searching for 10x stocks. 10. Diversify your portfolio. Investing in 10x stocks requires balancing the risk of high-growth opportunities with a diversified portfolio. While it's tempting to go all in on a single stock that seems like it could explode, diversification helps manage risk and increase your chances of finding winners. Spread your investments across different sectors and asset classes to ensure you're not overly reliant on one stock or industry. By diversifying, you reduce the impact of any single stock's performance on your overall portfolio. This approach allows you to capture multiple opportunities for growth while managing the potential downside. As you look for 10x stocks, remember that not every investment will hit a home run, so diversification is essential for long-term success. Thanks for watching The Financial Hacker. If you found this video helpful, make sure to like, subscribe, and share with anyone who could benefit from mastering their finances. Don't forget to hit the bell icon so you never miss an update on how to hack your way to financial freedom.